All right, so I got a question for you guys. What is the difference, or I guess rather, what is your definition of a dip, a pullback, and a crash? Or I guess rather, what do you think the difference between all of those are? So the reason why I ask is because I woke up this morning, I went to the gym, and afterwards I sat in my car, getting ready to leave, to come home, and I started looking on Twitter, and I noticed that there were a few posts that were talking about the Bitcoin sell-off. What's with the crypto crash? And I was like, crash? Really? A sell-off? What is going on? So of course I was curious, and I got home. I waited till I got home. I really wasn't that worried about it because I checked it before I went to the gym, and sure enough, I looked, and there was maybe a 2% difference, maybe I think it's about $450 difference between yesterday and today in terms of Bitcoin, and it just got me really thinking. I'm like, is a lot of this really just clickbait terminology? Because to me, I don't see it as a sell-off, and I sure as hell don't think look at it as a crash. To me, I just look at it as a pullback, or even possibly a dip. I think a dip is roughly pretty close to about 10%, maybe a little bit more, but. Yeah, so they just kind of got me really kind of thinking about that. Just kind of rubbed me the wrong way for some reason today. So, but hey, if it's your first time here, my name is Tom Gerchek, founder of the Consultant.Trade, where we help traders maintain consistency to create profitable futures. If that's something that you are interested in learning more about, head on over to the Consultant.Trade. So let's go ahead and dive into some charts here, some Bitcoin. It's been a little bit. It's been about I think roughly almost 3 weeks since I've done a technical analysis video like this. A lot of them lately have been more YouTube shorts. Mainly because those are quick and easy, and I can get some one-off. Really just I can get my point across within a few seconds. But since we're doing this, and I wanted to see your guys' viewpoint on a dip versus a crash versus a pullback, we're just gonna go ahead and get in here. So starting with Bitcoin 4-hour chart. This is kind of what I was looking at this morning. This is not a sell-off. This is okay. Maybe it's a small sell-off, but normally I think a lot of people are concerning. I don't know. I guess in my opinion, they are mixing a sell-off with a large move to the downside. Now, if you look at this, it's not even $2,000. Okay, if we use our measure tool, even the recent high. Our recent higher high, and we go down, that's 7%, $1,700. That's nothing compared to what we've been through in the past. That is a sell-off. That is a crash. These are sell-offs. These are crashes. This little dinky little pullback, this is nothing. Okay. However, it's not to say that we're not going to pull back anymore. So right now I've got the Elliot wave on the 4-hour. This right here is leg 5. Okay, so leg 5 is actually looking pretty good. I think it's obviously it's definitely a solid leg 5. We're working on leg A. So leg A, B, and C is the corrective wave from our impulse. Okay, so our impulse from January, well, I actually think it's what started in beginning of December through January and leading us to now. Okay, so the end of the impulse wave, so we're going through a corrective wave now. So I think this is going to be pretty close to where leg A is going to stop. Now, don't base any trades off of that. Please do your own due diligence. You know, I could be wrong. Okay. So let's take a look at this. The Fibonacci here. So this is leg. So we're measuring leg 5. So the end of leg 4 to leg 5. So I'm just bringing it up to the end of wave 5, and you can see here, wave A is you know, we've got these Fibonacci points here: the 3-8, the 5, the 6-1, and the 7-8. Now, the reason why, I mean, we're gonna have a deeper pullback, but it's gonna depend on how far wave A decides to go. Okay, so here's how we look at this. All right, so this is, let's look at, so I'm gonna grab the Fibonacci tool. I'm gonna go to wave A. I'm gonna go down here to what is potentially right now the end of wave A. Okay, I'm gonna just bring it over here so we can kind of get a clearer picture of what we're looking at, where our levels are. So as you can see right here, the 618, the 5, and the 38 line up with what is projected on the Elliot wave tool in TradingView. Okay, so that's kind of why I'm saying this might be where wave A sits. Okay, and then we might be on our way to form wave B. Okay, now the thing is, the reason why it's going to depend on our dip, on how far we pull back, because wave C is typically a longer wave than wave A and wave B. Wave C itself can be at times its own impulsive wave. Can be, doesn't mean it will, but it can. Okay, so my predictions for this are definitely going to be, you know, once we finish leg B, my bet is at a minimum we will see 22.8. Okay, that's my prediction. Eventually we will see 22.8. And at you know, at the most, I'm hoping maybe 22, you know, 22.1. Worst case scenario is we dip down to, you know, the 21.5 to 21.3 area. That is probably our worst case scenario for a full retracement. The reason why I say it's a worst case scenario is because if we start to break this area, we have the potential to make this into a reversal. Okay, this corrective wave could turn into a reversal, and we would have even further down, you know, downwards trend, probably further, you know, back below 20,000. Because if you look at where our previous structure is, we broke, you know, we broke the 21, what is this, 21.5, and we didn't retest this until here and here. Technically, we've only really retested this level twice before we went back up. So I think it's only natural that we either make it all the way back down, or we make it somewhere between, you know, the 618 and the 76, or the 78. Okay, that's kind of my prediction in terms of this. So again, just to reiterate, I think, you know, if this is our point, we'll go up, and we will definitely come back down either here or somewhere in this area, before we continue back up. At which, you know, this level here, we would have to be able to break that in order to continue our upward trend towards 25 and 30,000. Okay, that's kind of my analysis for Bitcoin. You know, it's going to be roughly about the same expectation for pretty much, damn, I'm trying to get that off. Ethereum's gonna pretty much be the same thing. Let's go back to the 4 hour. Yeah, Ethereum kind of paints a little bit different of a picture, but here, I mean, even here, I mean, you can kind of see what I was talking about before. You know, you have leg A, leg B, and leg C is the longer leg of the two corrective wave legs. So, you know, Ethereum here is, you know, the 1600, and about 1500 is not 1500. 1600 and probably about 1550 is probably a good assumption here for support, which, if that's the case, I mean, you can definitely expect you know, some further downside here. So BNB is in the same situation. 4 hour chart, we got leg A, we got leg B here. Leg C is definitely looking to be about the same. So let's see, and ADA. So Cardano is one that I've been trading as well. Yeah, it's been doing really good. I've really enjoyed trading ADA, Cosmos, and Atom and Cardano have been my major trades probably the last month. They've been paying off really well. So been more taking position size trades rather than faster day trades. So the position type trades have definitely been paying off. Due to, I mean, these swings are pretty decent for, you know, the amount of size that you can get out of, you know, 39-40 cents, you know, with, you know, some leverage. So, but other than that, yeah, I mean, this is our baby right now. This is Bitcoin and Ethereum are the two to be watching right now. So, but before I jump off here, I do want to kind of give you guys an update on the website. Again, the reason why I haven't been doing these type of videos in the last couple of weeks is because I've been really trying to work and concentrate on the framework that I've been working on since December, going through the rough drafts and kind of getting everything laid out for you guys. I plan on trying to present this within probably the next 2 weeks. Still working on some final touches, and I think you guys are gonna love it, and it's gonna bring a whole new view of trading than I think literally any of you are used to even seeing. Okay, no, there's no guru, there's no community out there that is currently doing what I'm looking at doing right now. Okay, so I mean, it's going to be huge, and I think you guys are absolutely going to love it. So outside of that, again, if you guys are interested in learning more about that, be sure to head on over to the consultant.trade website. Sign up for a free membership at the moment. Sign up for that so you at least get the emails, the updates, anything that I post to the website. You'll be getting notifications for that the moment I post. So that's really important if you want to follow this type of stuff. So but lastly, if you guys are interested in any of the tools that I use, check out the comments, or check out the links in the description. There's some discounts down there for you for Jigsaw Day Trader, Journalytics. There's some stuff down there for TopStep Trader. Some discounts, I think that's like 25% off of any of the trading combines as well. So check those out down there, and don't forget to also let me know what you guys think about the difference between the dip, the pullback, and the crash. So I'd really like to get your guys' opinions on what you guys think is the difference. So other than that, guys, I will see you in the next one. Later.